Chapter 10, Preparation of the Financial Statement, Post-Adjustment. Alright, so this is our learning objective. So after completing this chapter, number one, we are able to prepare post-adjustment, profit or loss. And then the other one is we are able to prepare post-adjustment statement of financial position. So this is our introduction. So the previous chapter demonstrate how make year-end adjustment relating to non-current asset, the depreciation and accumulated depreciation, and then prepaid and accruals, and then allowance for doubtful debt. So this is the chapter, how are we going to make an adjustment into our financial statement. And then preparation of post-adjustment financial statement, just like what I said before. So we are going to prepare the adjusting entries made and posted to the ledger at the end of the accounting period. So these adjustment entries include prepaid and accrual expenses, all right, and then prepaid and accrued revenues, depreciation and accumulated depreciation, and then allowance for doubtful debt. So this is we are going to prepare in the how it's going to affect in the financial statement. All right, for the illustration one, so these are the this is the trial balance for the company of each enterprise. So we are required to prepare the profit or loss for the year ended 31st December 20x8, and the statement of financial position is at 20x8. So this is the company's name and this is the trial balance. So we are being given the trial balance. All right, we move one by one on the item. All right, return inward and return outward. So we are being given both the debit and credit. So the debit side refers to the return inward, and the credit side is refers to the return outward. And then the capital, nothing much. All right, discount. All right, we also have discount two parts on the debit side and the credit side. 1,800 is the discount allowed, and 3,000 is actually for the discount received. So this is our premises cost and fixtures and fitting, and this is for motor vehicle cost. So we are being given the three non-current asset, right? So here is non-current asset, and we also being given the accumulated depreciation for the two asset, for the fixtures and fitting and motor vehicle. All right, so here is the opening inventories. At the beginning is given in the trial balance. So this is our expenses, printing and stationery. So this is expenses also, repairs and maintenance. All right, so this is account payable and receivable. So this is for the receivable, and this is credit for the payable. Okay, so investment is our non-current asset. Okay, so this is liability. Dividend on investment, our revenue. So this is our expenses. And then purchases and sales, we are given two parts. So this is for the purchases and this is for the sales. All right, drawings, so being given 400. So allowance for doubtful debt, okay, on the credit side 2,000. So this is relate with our account receivable, relate with our account receivable. And then rental received is our revenue. General expenses, only one item given. Cash at bank, so this is our current asset. Salaries and wages, our expenses. Insurance, our expenses. Electricity and water is our expenses. Okay, so this is let me write down non-current asset. So this is accumulated depreciation. Okay, so this is all the item being given in our trial balance. Okay, have a look on the additional information. Closing inventories 126,000. So depreciation is to be provided. Fixtures and fitting 10% on straight line. Motor vehicle is 20% on the carrying value or based on the reducing balance method. Allowance for doubtful debt, next one. Allowance for doubtful debt is to be adjusted to the 5% of net account receivable, and bad debt is to be written off for the year is 3,000. So this is relate with the allowance for doubtful debt. And then this is for the interest. Interest is 8% taken on 1st July 20x8. So it means that here it's not full for 1 year, it's only 1st July until 31st December. It's only for 6 months, 6 over 12 months. And then what else do we have here? So the owner took goods, 4,000 from the business for personal use. So if the owner took goods, all right, so what we have to do, our purchases should be minus with drawing. Because when the owner took goods, so the amount that we purchase is actually used for the goods is used for the personal use. So 3,900. So we have to find the total expenses, and then the 3,900 is for the carriage outward. And then the accruals and the prepayment is stated over here. All right. So printing, repairs and maintenance. So this is our expenses. Rental received. So this is our revenue. Okay. The accruals we have expenses and revenue, and for the prepayments, electricity and water, so this is for our expenses only. All right, so this is our company and this is our topic. So our title, statement profit or loss for the year ended 31st December 20x8. And then the first item, we have to find what is our sales, and then less with discount allowed and return inward. So our sales, so this is our sales, all right, 756. And then, okay, this one, 756. And then we have to less with our return inward. So return inward is here, 39,000, okay. And then we have to less with the discount. Okay, so discount on the debit side is discount allowed, on the credit side is a discount received. So sales, it relates with the discount allowed, 1,800. So 756 minus with discount allowed 1,800, and then minus with return inward 39,000. So we calculate, we get 715,200 is actually for our net sales. And then we minus our cost of goods sold. So our opening inventory plus with purchases. So our opening inventory is stated here. Our opening inventory is 100,000. Okay. And then we plus with our purchases here. We took 464,000. So 100,000 is our opening, and then our purchases 460,000 only. Why? Because we have our adjustment here. The owner took goods 4,000 from the business for his personal use. So 4,000 is taken by the owner. All right, have a look. Our purchases is 464. So the total purchases is 464, and then we minus with the 4,000. Where's the 4,000 come from? Because the owner took good for themselves. So the 4,000 here we have to take out. It's not for the company, it's for the personal use. So the 4,000 we take out, and then we add to our drawing account, right? So our drawing will add with 4,000, okay? And then our purchases will be less of 4,000. So this is our new purchase. Our net purchase is 460,000. So 460,000 is actually 464 minus 4,000. And it's also is going to affect our drawing. So our drawing here is our drawing, is actually 400. 400 is the original one, plus with the 4,000 taken in the adjustment. So the total is 4,400. So we move on to less discount received and return outward. Discount received 3,000. Okay, this is our discount. And then our return outward. So this is our return outward 28,000. Okay, so less discount 3,000 and return outward 28,000. So we calculate our net purchase, we can get 429,000. And then we have to add with expenses on purchases, some sort like if we have carriage inward, if we have import duties, we have insurance on purchases, so we have to add all them together. But now have a look, we only have the carriage inward. Okay, so carriage expenses is 8,000, and we have the adjustment of the carriage expenses over here. So 3,900 is the carriage outward. Okay, so from the 8,000, so 3,900 is carriage outward, and the difference is carriage inward. So basically we can see here just now total carriage expenses is 8,000. 8,000 we have carriage inward and we have carriage outward. So it's stated in the question 3,900 is carriage outward. So what is the total of carriage inward? So 8,000, the total carriage expenses minus with the carriage outward. So this is the carriage inward. Okay. So here we have to make in our adjustment. Okay. So carriage inward. Alright. So 4,100. How to get the 4,100 is actually 8,000 minus 3,900. Okay. This is for the carriage inward. And then in the expenses, our carriage outward is actually 3,900. Okay, so this is related with working to. So we can get cost of good purchase, and then we less with closing inventory. So here the closing inventory is 126,000. So the 126,000 will affect in the statement of financial position and also profit or loss. So the closing inventory will be 126,000. Okay, it also will be effect in your current asset, which is closing inventory is 126,000. So after we get the cost of goods sold, we minus, alright, we take it our net sales minus cost of goods sold, we have to get our gross profit 308,100, and then we add with other revenues. So other revenues here we have dividend on investment. Dividend on investment is actually 10,200. So dividend on investment 10,200. Alright, rental revenue. Alright, so it means that there at the end of the accounting period, 4,000 that has been earned but not yet received by the company. So it means that here is still calculate the 4,000 is the revenue for the current year, but then you haven't received yet. So in your profit or loss, we have to state that your revenue earned is actually 32,000, and the 4,000 you are not received yet, you are going to receive in the future years. So this one we put under current asset, so it's belong to you even though your debtors still do not pay to you. So the 32,000 will go to profit and loss, and the 4,000 will go to your current asset. Okay, so see over here. Alright, rental revenue. So it means that here the 28,000 and the 4,000. So total up is 32,000. And this one also will exist in your current asset. Alright, this one. Okay. Accrued rental which is 4,000. So we total 10,200 and 32,000. So other rental revenue will be 42,200. And then we are going to less with our expenses. So our expenses, just now we already have our carriage outward 3,900. So here is our general expenses. There is no adjustment for the general expenses, 6,000. So adjustment for this one, allowance for doubtful debt. So allowance for doubtful debt. So doubtful debt is to be adjust 5% of account receivable, net account receivable, and bad debt is 3,000 to be written off. Okay. So before that, we have to see the figure of our account receivable. This is our account receivable, 163,200. Okay, this one. And allowance for doubtful debt. So this is allowance for doubtful debt, which is 2,000. Okay, so this is allowance for doubtful debt. Okay, so how to get our net account receivable? 163,200 minus with 3,000. So where is the 3,000 come from? So 3,000 is actually the amount that the our receivable are not able to pay. So we minus, so we get 160,200. Okay. So adjustment, we minus. So this one, okay, 5% times with 160,200, we get 8010. Okay. So here the 2,000 just now, we put it over here, the balance of allowance for doubtful debt. And then this is the bad debt for the current year, debit, allowance for doubtful debt, 3,000. And then we credit account receivable. Okay, 3,000. Okay, so here we put the 3,000, we debit allowance for doubtful debt, and then we credit account receivable. And then this is the balance. 8010 is our balance CD, is actually our BD for next year, 8010. So it's cross for the current year. So after we see here the total 8,000 plus 3,000, so 8010 now become 11010. This one 11010 minus the beginning balance at the beginning of the year is given in our trial balance. So this is our total bad debt. So this bad debt is going to be put under profit or loss, and then this figure, balance CD, will be stated in our statement of financial position. So working, if some of you do not prepare the account, you can state the working like this. All right, 8010 plus 3,000 minus 2,000 plus 3,000 minus 2,000. Okay, printing, this one, printing and stationery, repairs and maintenance, we have 2,000 and 6,000. Because printing and stationery and repairs and maintenance, it falls under the same category. Printing and repairs and maintenance accruals, so 1,000 and 1,400. Printing and stationery, 2,000. So 1,000 is accrued. Okay, printing and stationery do not yet incurred, but it's actually 2,000 is paid in our profit or loss. 1,000 is still not yet paid. So it means that the total expenses for the current year is 3,000. And then 1,000 will be stated under current liability. Printing, okay, 2,000 plus 1,000. Alright, If in your final, you don't want to prepare your working, we just put your working over here is also can. Alright, just you can see that you can minimize your time. So accrued printing and stationery 1,000. Okay. Alright, repairs and maintenance over here is 6,000. Okay, and then accruals 1,400. Now repairs and maintenance the same. So this is profit and loss 1,400 still accrued. So the total profit or loss is actually 7,400. Why? It's already paid 6,000 only, 1,400 still not yet paid, but the total expenses incurred during the year 7,400, and the 1,400 should be in our current liability. So here, or you just write over here 6,000 plus 1,400 over here. Sorry, 1,400 only. Now become 7,400. And the 1,400 will be in our current liability. Electricity and water is 4,800. So we see our electricity and water, we have the adjustment of prepaid. Means that we overpaid our expenses of 800. Okay. So this is our electricity. Okay. Overpaid of 800. And currently you already paid 4,800 and including 800 for next year. We only record in our profit or loss for the current year, so we have to minus. So only this one goes to our profit or loss, and then the 800 will go into our current asset. Why current asset? You overpaid of your expenses. So here 4,800 minus 800, and the 800 here, okay, this is you get 4,000, and the 800 will be in your current asset. So this is our salaries and wages 30,000. Okay, overpaid of salaries and wages 2,400. So this is 2,400 which we paid in advance. So it means that you paid for the future years. So what we have to do, we have to exclude from our profit or loss. So 30,000 is on our trial balance. We minus 2,400. So only profit or loss 27,600. The 2,400 will be in our current asset. So here the 30,000 minus 2,400. Okay, and the 2,400 will be in your current asset. Right, so interest on loan here 8% and is on 1st July, is only 6/12. Right, so what is the total interest? Sorry, total loan is actually 500,000. Alright, 8% times with the amount of loan times with only 6/12. What 6/12 is start from the 1st July until 31st December. So this is for 6 months. And then the interest is 20,000. So the 20,000 not yet paid and is shown in the expenses in profit and loss, and it also should treated as the accrued under current liability. Okay, so 8% times 500,000 times 6/12. Alright, 20,000. And the 20,000 will exist in your here liability. Right, now we move on to other expenses. Insurance. So insurance is 6,000. No adjustment for the insurance. We just put 6,000 over here. Now have a look on the depreciation, fixtures and fitting, and motor vehicle. Fixtures and fitting, you just take 10% times with the 18,000. So we get 1,800. So this one in our profit or loss. So in our accumulated depreciation, so this is the previous year, plus with the current year. So where's the previous year come from? From the try balance. Okay. And then motor vehicle, this is based on the carrying value. So 20% we take our cost minus with accumulated depreciation. Our cost of motor vehicle 160,000 over here minus with our accumulated depreciation 57,600. 160 minus 57,600 times with 20%, you get 2480. So 2480 is in the profit or loss, and then the total here 78080 will be in your statement of financial position. And this one also same, the 1,800 will be in your profit or loss. This one will be in the statement of financial position. So this one is 10% times with the 18,000. So you get 1,800. 20%, 160,000 minus 57,600. Okay, so equals to 2480. So we total our expenses will give 109,190. So this one, our gross profit plus with other revenue, and then minus with expenses. So our profit now become 241,110. Statement of financial position. Alright, firstly is our non-current asset, so 600,000. There is no accumulated depreciation for this one. So our carrying value will be 600,000. So fixtures and fitting 18,000, and then this one motor vehicle is 160,000. So this is our calculation just now, 5,400 and 7,8080. This is the figure for the item of statement of financial position. So this one, the cost minus with 5,400 will get 12,600. And this one, 160,000 minus 7,8080 will get 81920. Alright, so this is our total of non-current asset. And also we have the investment of 40,000. This is our investment, 40,000. So the total here of our non-current asset plus with the investment is 734,520. And then we have to calculate our current asset. And then our account receivable is 160,200 minus allowance for doubtful debt. This one already calculate before, alright? So 152,190. Cash at bank, we just take from our trial balance, alright? And this is the adjustment that I already talked before. And then we total up, become 1325110. Okay? And then finance by capital at the beginning, 350,000. We take it from our trial balance. And this is our net profit. Take it from our statement profit and loss. And this is the adjustment that I talked before. So this is our ending balance. And then we plus with our non-current liability, 500,000. Okay, from our trial balance also. And then our current liability. Current liability, 216 come from our trial balance. And then we add up of the owner's equity, liability, and current liability. So the total will be the same, 1325110. Thank you.